Hello, everybody. So today I want to briefly talk about one old mega trend, which is e-commerce. It's actually one of the first mega trends that I got exposed to in investing because this one has been around for a while, a good 15 years at the very, very least. And of course, in some countries, e-commerce is more up and coming, and in other countries, it's very mature. If you look at the West in general, the US, Europe, and China, that's Alibaba, that's Amazon. These are regions where e-commerce is very, very, very mature. And you have other countries where e-commerce really came a little later, or at least where giants in e-commerce became a thing a little later. And so let me begin with one of these examples. The first one is Coupang. Coupang has been public for just a few years. What is Coupang? Well, Coupang is quote unquote the Amazon of South Korea, and they're highly praised, highly inspirational CEO. They have a Prime type service where you can watch videos and you can order things online, quick shipping. It's really following the playbook of Amazon. And I've looked at the stock before, and I tried to stay away. And when I look at it again, unfortunately, I would argue I would have to stay away mostly because I have Mercado Libre as my favorite play. We'll get to Mercado Libre in a second. The revenue growth is 14%. Gross margin is very low at 25%. They're investing heavily in their logistics, in their infrastructure. They did an acquisition from a luxury retailer recently that cost them a lot of money. And Coupang, interestingly, is also trying to expand in Taiwan, which may or may not be a good idea depending on the narrative of the market. That could become a sticking point if there is a narrative developing on Taiwan. So, because of that, because they're expanding, because they're investing, yes, it's a 3% EBITDA margin and the rule of 40. If I look at the rule of 40, so how much I'm expecting by adding revenue growth, right? How much money it's going to grow? How much money are they going to take in? And I add that to EBITDA margin, right? I get a 17. So the minimum for me to consider investing should be a 40. So obviously that doesn't get very appealing. Now I want to talk about two other stocks, and one of them that I own quite a bit is C Limited. Now I bought C Limited. Keep in mind, I bought C Limited when the stock was growing much faster. C Limited is a special situations type of stock for me. It's a stock that has a money division, a gaming division, and an e-commerce division. And of course, the bulk of the business now is the e-commerce and the money second and gaming third. And the reason for that is because they had the world's most popular game during the events of 2020. The most popular game, and that game got banned in India. And that hurt one third of their revenue growth. That hurt one big chunk of their revenue was hurt because it was declining. And so even though e-commerce and C-Money was thriving, Shopee was thriving, Garena, which is their gaming division, was not thriving, was declining. But the game was allowed again in India, which is why I own this stock. I believe the growth will come back for a company like C, especially now that the CEO has achieved Wall Street's demands, Wall Street's request of EBITDA, and he saw that the price of the stock barely moved. Now he's going back to growth and going back into investing into the core business and into growth. And that's what I want to see from an e-commerce stock. So I own this stock, and that's mostly because I believe the growth is going to rebound. And I'm fine with EBITDA margin dropping back near zero or a little negative. I'm fine with that. I want to see some growth. Note for C Limited how great the gross margin is at 47%, right? It's much better gross margin than Coupang. And it's a business that's more optimized in my view. Moving on to Alibaba. So Alibaba, right? It's the question of Chinese stocks. Does one buy Chinese stocks? It's the endless question, and every other year you're going to have a debate as to whether they could get delisted from U.S. listings, etc. I personally wouldn't have a problem buying Chinese stocks. Well, in this environment, it seems like the Chinese party has warmed up to the idea of promoting the economy, boosting the economy, and Baba went through its phase where, it really had a lot of hate from the Chinese government. It seems like they're past this phase. Nonetheless, for me, for Baba, the problem is the revenue growth at only 4% predicted. I believe if one buys Baba, it's on the hope that the stock re-rates and that the multiple re-rates. But are you really buying Baba because you're hoping a lot of top line growth? No, I think you're buying Baba because you are hoping that, yeah, it trades in line with at least even the Chinese peers, right? But it trades at a higher level. It's a dirt cheap stock. It's a deep value stock, Alibaba. That's what it is. And it's not a rule of 40 either. It has a 24. It's not a rule of 40. Now, profitable business, best EBITDA margin out of all the business I covered today. Gross margin is okay, but the revenue growth is where Baba is lacking, and it's got a lot of competitors in China. It has, Pinduoduo. Um, I can't remember all of the other names, but there's a lot of competitors. JD's one. There's a lot of competitors to Alibaba in China. Very competitive market. Now, moving on to a stock that this is my biggest position in e-commerce. This is a big position for me. If that went to zero, it would hurt. It's a top 10 position. That's Mercado Libre. Mercado Libre is the leading e-commerce platform in Latin America. They do deliveries, they do advertising, they have the platform where the marketplace, right? The marketplace platform. They also have payments. It's really a comprehensive company. It's like an Amazon without the cloud. And I would argue, given the growth, it's a very compelling stock because it's predicted to grow at 37% over the next 12 months. Gross margin is great at 57%. It's actually the highest of all of them. And EBITDA margin is great too at 19%. And it's the only e-commerce stock in this megatrend. Keep in mind, this is a more mature megatrend, but it's the only stock in this megatrend that breaches the rule of 40 with a 56 rule of 56. It's great. I love that very much. Mercado Libre is a stock that I regularly add to, but really on a DCA basis. We had some luck, about 18 months ago, where the stock really got cheap under 1,000, but now it's back expensive again, and my guess is that it will keep becoming more expensive. Noting that if you look at all of these stocks on the way I judge stocks, you may see a 0.31. It's actually nowhere near expensive compared to many of the stocks that I cover on the channel. For example, Tesla is above a 1 on this, right? Enphase right now is almost a 1 on this. So it's a cheap stock relative to a lot of stocks that I cover on the channel. It just happens to not be extremely dirt cheap. That makes some sense. But that's because you have growth. That's because you have a lot of growth. But it's still in the top in the top 30%. It's in the first third of my cheapest stock whenever you get under a point 3-ish, right? Whenever you get under 0.3, you're about that. You're in the top 30%. Now, the last stock that I'm covering, and I actually own Amazon, but that's what I call my savings account stocks. It's like more like a stock that I own and I forget about, and I just don't touch it and forget about it, and it's like an emergency fund. It's kind of a way I look like I look at stocks like Amazon and Google. These two stocks, I look at them as my savings accounts, and so I just don't ever touch them, and I don't follow them. I do not follow Amazon. It is a company that has reached kind of a black hole status, and that is kind of sucking everything in its path. If it makes some sense. It's the behemoth of e-commerce. It is the company that everybody has to deal with. It is the company that tries to disrupt everybody, and sometimes they get ahead of themselves. If you ask me, Amazon wastes a lot of capital trying to pursue ideas of disruption, and they don't always do it right. You may have seen a few headlines about Mexico, about how they just got passed by Mercado Libre in Mexico, and now they're losing a bunch of advertising money because Mercado Libre is beating Amazon in Mexico. Well, it's the problem when you have too big of a business. Sometimes you can't focus, and I would argue Amazon oftentimes kind of all over the place. I could talk about their initiatives trying to compete with HIMS, kind of all over the place. But it's the spirit of Amazon. It's the idea that it's always day one at Amazon. Day two is death. Day two is when the business is dead. Day two is when you stop innovating. And given that it is some of their side innovation that gave them Amazon Web Services, I understand why Amazon has no problem, say, spending $5 billion to develop the Amazon Fire phone, and yeah, it was an absolute failure, right? It was a $5 billion write-off when they developed the Amazon phone. That didn't work out, but they're willing to take a chance. It's a company that keeps being willing to take a chance, and it is a company that is nonetheless still has a core business, and really much of that 11% next 12 months growth is due to the cloud, but the cloud is slowing down a little bit, and e-commerce is also growing at about that pace, right? 11%. If you look at markets that are a little earlier on, that's 14%. It's pretty mature. It's a pretty mature market. We are at the end of the S curve. Nonetheless, the point is when you look at Amazon here on my spreadsheet compared to all of your other stocks, it's fairly expensive at a 0.64 for a stock that grows less fast. But it's the leader in the US, so of course it's going to trade at a premium. It's one of the stocks that has the best net promoter score out there. If you look up the net promoter score of Amazon, how many people recommend Amazon to their friends. It's staggering. That's kind of the way they protect themselves against antitrust. Is that if you're an Amazon customer, you're very likely to recommend it to your friends because you're likely to love Amazon. Fascinating business, definitely one of the one of the industrialists. Jeff Bezos is one of the industrialists of our era. It's a no-brainer for me to own a stock like Amazon, but it doesn't reach the rule of 40. It's a rule of 24. But it's a stock I've owned for a long time, so I'm way up on it, and I don't want to take capital gains, so it is a savings account stock, as it often happens in investing. So, anyways, this was not investment advice, no financial advice. This is just entertainment. Thank you so much for watching. Please like, please subscribe, and have a wonderful day.